In Japan, your company can be totally profitable and still get hit with penalties or nasty letters from the tax office just because you missed a date on the calendar. Here's what most foreign founders don't realize. They think about tax season once a year, maybe twice if they're being careful. But Japan's corporate system is actually built around tight 2-month windows after your year end, plus monthly obligations, plus these massive spikes in January and July. And if you're not watching those dates, you're going to scramble. Trust me on this. The result, last-minute panic calls with your accountant, penalties and interest for late filings or late payments. And here's the bigger consequences that most people don't think about. Risk for your business manager visa, blocked subsidies, damaged bank relationships, all because your numbers and filings looks messy or incomplete to the immigration office or to the bank. Let me tell you what this actually looks like in practice. We've seen founders who assumed my accountant will remind me. They forgot about the January reporting deadline. Turns out their payroll reports and withholding slips weren't done. They ended up scrambling for documents while trying to run the business, employees asking where their tax forms are, municipalities sending follow-up notices. It didn't have to happen. It was completely preventable. Here's the good news though. Japan's company tax and payroll obligations follows a repeatable yearly pattern. Once you understand the pattern, you can plan your cash flow, avoid penalties, and actually sleep at night. Not to mention, you'll look way more professional to banks and immigration. Today, I'm walking you through the full calendar for a company with a December 31st fiscal year end. That's the most common setup for foreign-owned subsidiaries. If your year end is different, like March 31st, you just shift the corporate deadlines accordingly. We're covering the big picture view of the year, corporate and consumption tax deadlines, the monthly payroll and withholding cycle, the January crunch at the end of January, the July crunch around July 10th, and how to turn all of this into a simple checklist you can actually run with your accountant. This content is for general informational purposes only and does not constitute professional advice. We make no warranties regarding accuracy or completeness. Use of this information is strictly at your own risk. We are not liable for any damages or consequences. Please contact us for a formal consultation or consult a qualified expert before taking action. Part 1. The big picture. Your company's tax and payroll year. Don't think taxes happen once a year. Think of 3 layers running at the same time. Layer 1, once a year, anchored by your fiscal year end, corporate tax, local corporate taxes, consumption tax, final returns. Year-end payroll adjustment, that's nenmasu chosei in Japanese. Layer 2, monthly cycle, payroll, withholding income tax on salaries, social insurance, and resident tax remittances. This happens every single month, no exceptions. Layer 3, key spike months, December, for year-end adjustment in payroll. End of January, major reporting deadlines for salaries and withholding. Around your year-end plus 2 months, corporate and consumption tax filing. July 10th, labor insurance and social insurance annual reports. Picture a timeline running from January to December. You've got monthly tasks happening constantly. Then you've got these big red circles. End of January, your fiscal year end. 2 months after fiscal year end, July 10th. Once you mark those dates, almost everything else just falls into place. Your takeaway here. Once you know your fiscal year end, you can map almost all of your company's tax and payroll deadlines around that date, plus January and July. Simple as that. Part 2, corporate and consumption tax calendar, company level. For your company entity, whether that's a KK, a GK, or a branch office, the main anchors are your interim payment if applicable at mid-year and your final return and payment after fiscal year end. Let's start with the final corporate tax and local tax returns. For corporations, corporate tax, local corporate tax, corporate inhabitant tax, and enterprise tax returns are generally due within 2 months after the end of your taxable year. So if your fiscal year ends December 31st, your deadline is around the end of February, adjusted to the next business day if that falls on a weekend or holiday. Payment of the final corporate tax is usually due by the same filing deadline. Pretty straightforward so far. Now, there's a possible extension. Some companies can apply for a 1-month extension of the filing deadline if the shareholders' meeting can't happen within 2 months or if accounts aren't finalized. Here's the important nuance that trips people up. In many cases, the filing deadline may be extended, but tax payment still needs to be made based on estimates by the original 2-month date. Otherwise, interest applies. So if you think you'll need this extension, talk to your accountant well before year end, not during the scramble when everyone's stressed out. Interim tax payment. If your fiscal year is longer than 6 months, most corporations must file an interim return and pay provisional corporate tax within 2 months after the first 6 months of the year. This is often calculated as roughly half of the prior year's tax, unless you file an interim return based on actual half-year results. Consumption tax, that's Japanese VAT. If you are a consumption tax taxpayer, your final consumption tax return is also generally due within 2 months after fiscal year end. Filing frequency depends on your size. Annual by default for smaller businesses, quarterly or monthly if your sales exceed certain thresholds, or if you're designated as such. For monthly or quarterly filers, returns and payments are usually due by the end of the following month. Let's walk through an example for a December 31st year-end company. Around August, you'd have your interim payment if required, covering January to June, December 31st, fiscal year close, end of February, corporate and consumption tax, final return and payment, end of March if you're using the filing extension. Your takeaway, for your company, think fiscal year end, then 2 months later equals big tax deadline. Add interim payment mid-year if required. That's the pattern. Part 3. Monthly payroll and withholding cycle. Every month, your company is basically a mini tax office for your employees. Here's how it actually works. Withholding income tax on salaries. When you pay salaries or bonuses, you withhold national income tax based on official tax tables. Standard rule, the withheld tax must be paid to the tax office by the 10th of the following month. If the 10th is a weekend or holiday, the next business day. Small companies with fewer than 10 employees can apply for a special rule called Noki no Tokure to pay withholding tax twice per year. Instead, tax on salaries paid January to June, due July 10th. Tax on salaries paid July to December, due January 20th. Check the exact dates with your tax office if you're using this option, because there's some variation depending on interpretation. Resident tax, that's inhabitant tax, special collection. The municipality sends you each employee's resident tax amounts by around the end of May. You then withhold monthly from June payroll through the following May and remit to the municipality, typically by the 10th of the following month. Social insurance premiums, health plus pension. You withhold the employee's contributions and add the employer portion. Total social insurance contributions are generally paid to the pension and health authorities by the end of the following month. Here's the simple monthly cycle you need to remember. End of the month, run payroll, withhold tax, resident tax, social insurance. 10th of next month, remit withheld income tax plus resident tax. End of next month, pay social insurance. Rinse and repeat every single month. Your takeaway, every month, pay staff, withhold, send to government. Your internal deadline is payroll day. Your external deadlines are mostly the 10th and month end. Once you get into the rhythm, it becomes automatic. Part 4. The January crunch, payroll reports and salary slips. For payroll, the end of January is the biggest deadline of the year for your company. No exaggeration. Let's start with year-end adjustment. As an employer, you perform the year-end adjustment via December payroll or very early January so that each employee's withholding equals their final income tax for the year. By the end of January, your company has 3 major obligations that you cannot miss. First, employment income withholding records. You prepare withholding records showing each employee's total salary and tax withheld for the calendar year. 1 copy goes to the tax office, 1 to the employee. Due date, January 31st, or the next business day if January 31st falls on a weekend or holiday. Second, statutory reports. These are reports covering various payments. Salaries, some types of professional fees, rents in some cases, sent to the tax office. The deadline is January 31st, or the next business day if that date is a weekend or holiday. Third, salary payment report. This is sent to each municipality where your employees live, summarizing salaries paid. Again, the deadline is January 31st, with the same weekend and holiday adjustment. Why does January matter so much? These reports drive your employees' next year's resident tax calculation. If you miss or misreport, employees may get wrong resident tax bills and your company may get follow-ups or penalties. Employees will come to you asking why their tax amounts are wrong. The municipality will send notices. It becomes a complete mess that takes months to untangle. Your takeaway? For payroll, December for adjustments, and the end of January for reports are non-negotiable. Block them in your company calendar right now. Part 5. The July crunch, labor and social insurance, annual reports. July is the big admin month for labor and social insurance. A lot of founders forget about this one until it hits them. First, annual labor insurance report. This covers workers' accident insurance and employment insurance. The labor insurance year runs April 1st to March 31st. Each year, between roughly June 1st and July 10th, you report actual wages for the previous year, adjust last year's estimated premiums versus actual, and pay the estimated premium for the coming year. Filing and payment deadline, typically July 10th. Second, Annual social insurance report, that's standard monthly remuneration. You submit a report based on April to June wages to set each employee's standard monthly remuneration, which determines health and pension premiums from September to next August. Deadline for the annual social insurance report is also typically July 10th. What changes after July? From September payroll, new social insurance premium amounts apply based on what you filed. Missing July 10th or filing incorrect data can cause incorrect premiums for a whole year, corrections, back payments, and extra admin. Nobody wants to deal with that mess, trust me. Your takeaway? Mark July 10th in red on your calendar. That's when your company renews both labor insurance and social insurance for the year. Don't forget it. Part 6. Putting it all together. Your simple company calendar. You don't need to memorize every statute or legal reference. Just anchor your internal checklist around a few key dates and you'll be fine. For a December 31st year-end company, here's your high-level calendar that you can actually use. Every month, run payroll, withhold income tax, resident tax, and social insurance. Pay withholding income tax plus resident tax by the 10th of the next month or semi-annual if approved. Pay social insurance by the end of the following month. December. Perform year-end tax adjustment for employees with the final salary payment. End of January. Employment income withholding records to tax office and employees. Statutory reports to tax office. Salary payment reports to municipalities. Standard deadline is January 31st, but if that falls on a weekend or holiday, the deadline moves to the next business day. This is your big deadline. Don't miss it. February for December 31st year-end. Final corporate tax and local taxes filing and payment. Final consumption tax return and payment if you're an annual filer. Around June, receive resident tax notifications for each employee. Start new cycle of resident tax withholding from June payroll. By July 10th, file and pay annual labor insurance renewal. Submit annual social insurance report for standard remuneration. Mid-year, around August or September, interim corporate and consumption tax payment if required. Your takeaway? Once you put these dates into your company calendar and align with your accountant and payroll provider, Japan's tax and payroll system becomes predictable, not scary. It's just a pattern you follow. Wrapping up, let's recap what you just learned. Your company's year in Japan is built around fiscal year-end plus 2 months for corporate and consumption tax. Monthly payroll, withholding and social insurance. End of January for salary and withholding reports. July 10th for labor and social insurance renewals. Here's the reassurance part. You don't have to memorize legal references or become a tax expert. Your job as founder is to know the pattern, put the right dates into your calendar, and make sure your accountant and payroll team are aligned. That's it. If you're setting up a company in Japan, or you're already running one and this calendar feels overwhelming, talk to us at SmartStart Japan. We help foreign founders set their fiscal year intelligently, build a real tax and payroll calendar, and coordinate with Japanese accountants and payroll providers so nothing falls through the cracks. Book your free 30-minute consultation at smartstartjapan.com and we'll help you map out your exact calendar based on your company's year-end and headcount. In Japan, staying compliant isn't about last-minute forms, it's about knowing your calendar. Once you do, the system starts working for you, not against you.